Hello traders, welcome to the LFB and our global video charting review for the 17th of May 2011. My name's Mark O'Haig from the LFB Trade Desk. We would ask that you pause the video and read the disclaimer before moving forward. This is the review for gold, bullion and silver. We're also going to take a quick look at the oil and crude markets as well. Newswires are covering the increase in bullion margin requirements required to hold gold and silver bullion positions as a reason for the recent price declines. There's also news headlines that George Soros's fund closed out a large hedge position that was long the exchange traded fund on gold. Trade desk updates recently highlighted the potential for moves lower in both bullion and in GLD and SLV, which are the exchange traded funds, ETFs, that track bullion momentum. Those moves look to have completed their near-term cycle. Any existing short gold or silver position should be closely monitored here while recent price action is absorbed, as potential signals have been trying to form since Friday, both long and short on gold and silver. So caution really is the key word at this point in time. There's very little in the way of news headlines to impact crude oil valuations, and potential price action looks set to come from overall global market sentiment to daily risk rather than anything else. Trade desk updates recently highlighted continued consolidation above support at 95 on West Texas Intermediate, and for USO, which is the exchange traded fund that tracks oil momentum, to consolidate above support at 37.50. Expectancy is for a break higher in crude oil prices if global equity markets can find buyers. Any existing short oil positions should be closely monitored, because if equities do move higher, that will drag oil prices up just a little bit. Conversely, need to monitor those short positions because you're going to build into them if equities do drop lower. We are at a pivotal swing point on bullion and oil trade. The technical charting reviews are provided for us by the LFB Trade Desk. These are near-term charts we're looking at today. They have a sentiment and momentum indicator built into them, and they also make use of near-term support and resistance points. These are proprietary and are the property of the LFB. Taking a look at the spot market for gold, the spot market is the current bullion traded price. We're sitting at 1400 on silver. We're sitting at 33. When we look at the silver price point, 33.20 was a very important price area of note over the course of the last couple of days of trade. Compare that to the gold chart. We're into the 1400s now. We've dropped through that 1500 price point, and we're testing the lows of last week around this 1475. The new drop lower in gold happened at 8:30 East Coast time on Tuesday, when the housing starts and building permit numbers came out that were dreadfully low, really were terribly low, and that sent equity futures lower and obviously took a big chunk out of the value of GLD. Strong buying activity was seen at 1490 on gold in April and May, and that's going to be a price point that now, as upside resistance, is going to be closely monitored. We've got signals coming from the gold market. We've had two short signals over the course of the last 3 days. We've had one long signal. None of them have been strong enough to confirm that they would be midterm strength signals, that they had an ability to hold through the midterm, and we've got an awful lot of chop. The daily client notes are highlighting how strong the intraday movements are without being able to move. Average trading ranges from the low to the high are increasing, and that's a signal that speculative interest is in the market. And speculative interest, when there's more speculative interest than there is institutional volume, creates a wheel spinning effect where the market can't move valuations. The exchange traded fund that tracks silver is SLV, had two signals, one long, one short, but really since the 5th of May, silver has tracked in a sideways kind of range around this 34.50 on SLV, the exchange traded fund. We're low on volume, we're low on momentum, but we're high on average daily trading range. The market is trying to break these SLV ranges and can't do it. From what we're seeing from a technical perspective, it really is a time to sit on your hands in regard to bullion trade until we get a confirmation signal one way or the other, long or short, that shows us these mid-term charts can break and hold. Taking a look at West Texas Intermediate, since the 11th of May, we've just had this sideways chop. We've got heavy resistance above now. This is the 100-day moving average that we can see up at 101. Keep an eye on that if you're looking at a long position, because that will impede you on West Texas. We've had three signals over the course of the last 4 trading sessions, and none of them have really been strong enough that look as though they can follow through and easily hold the momentum. It does look as though 95 and 101, 95 being support, 101 being resistance, are going to be the key points to monitor. Looking at USO, which is the exchange traded fund for the oil service industry, LFB clients did pick up this short signal on oil at the beginning of May, but since then we've really had very little. On the 6th and 7th of May, we hit 38.50, and that was a big area of support where the exchange traded fund bounced from, but now we're sitting at this 38.50 area again. This has created a quadruple bottom 4 times in the near term. We've hit this 38.50. If we don't bounce from here fairly soon, the signal will be that the next negative news headlines may be much higher oil inventories or peace within a region in the Middle East that maybe there's question marks about oil flows. If there is a headline breaks that's weak for oil and we're trading at these areas, this is just going to collapse like a house of cards, and West Texas Intermediate will probably touch $90 a barrel, and we'll look at USO down towards the 33, 34 price point handle. However, we haven't got confirmation of that yet, and patience really needs to be exercised in these commodity markets at this point in time, because we've got a sideways trudge, and that invariably is when most impatient traders lose money trying to preempt the next move rather than waiting for confirmation. That wraps up today's review of the commodity markets. If you do want to upgrade your subscription or you want to move to a higher level of access to the website, contact customer care at thelfb.com. If you are on a near-term trial period and watching the video to assess what we do, please feel free, if you go to the LFB website, services, subscriptions, and you'll be able to extend your period.